I think we should be looking at the parallels between this decade and the 1970s, because for people who lived through it, it was a really consequential time that is very similar to what's going on now. We had raging inflation and crashing dollar, and gold and silver were going through the roof. And the last piece of the puzzle between now and then was that back then we had a big war in the Middle East that interrupted the supply of oil. And that was one of the things that spiked inflation and caused the dollar to fall so hard. And we came very close to that just in the last week where, we were bombing Iran. Iran was not even threatening, but planning to block the Strait of Hormuz, which is a huge choke point for global oil shipments. So to me, having lived through the 1970s, this sounded really familiar. And back then in the 70s, it was a financial crisis, it was a political crisis, but the biggest part of it was that it was a crisis of confidence. We lost faith in the American system because it looked like the Soviet Union was in the ascendancy then. And, we couldn't control price levels, and the world was spinning out of control, and our involvement just seemed to make it worse. And so people were thinking that maybe, America as we know it, as a capitalist democracy, just isn't viable anymore. And that, of course, feeds into finance. When you start thinking that about your country, you don't want the currency anymore either. So gold and silver towards the end of the decade went absolutely through the roof, which is the investment thesis from all of this, and assuming today that, we've had bouts of inflation very recently, we get involved in the world, but the world is super messy and we don't really seem to understand what it is we're doing out there. And we feel like we're being manipulated by one party or another. And the dollar is losing its value kind of steadily, and that could become disorderly at some point. Gold and silver are now back to going up. So here's the important part of the comparison. In the early 1980s, we resolved the inflation of the 1970s by raising interest rates to double-digit levels. The Fed funds rate went up to like 16% at one point, and 10-year treasuries were up around there too. And I think mortgages were 18% at one point. And that squeezed inflation out of the system and strengthened the dollar. It stopped the dollar from just collapsing. But we can't do that today. If inflation starts to pick back up right now, we have so much debt. Because back in the 1970s, we were in pretty good shape financially. We could handle double-digit interest rates without it bankrupting everybody in sight. That's no longer the case today. Everybody is so indebted that if we try to use our one tool to bring inflation back under control, which is much higher interest rates, we will bring about a 1930s-style deflationary depression in a heartbeat. The minute the Fed funds rate got up towards double-digit rates, which is, what we would have to do to stabilize things, then that would be the end of the current global financial system. So, that makes this especially interesting from an economic nerd standpoint. In other words, theoretically, what can we do here? And it should make everything terrifying for people who don't spend their days obsessing over this stuff and figuring out just the right investment thesis and everything and have to live through it. But that's where we're headed. We've screwed things up on such a vast scale that, we're basically entering something like the 1970s, but on steroids, something vastly worse. Even if the details are similar in form, the magnitude of everything is going to be so much bigger that what comes is going to be not just something we live through, but something that ends the current system. So fascinating times and terrifying times. Well, barring World War III, which is, let's give that a 20% probability going forward. Okay. The finances of the major countries in the world and their currencies just keep getting worse. In the US, we're running $2 trillion deficits with no end in sight. And the interest on existing US debt is now about $1.5 trillion a year, which has to be borrowed. So that turbocharges debt accumulation, makes all of our problems worse. And there's no way out of it. And the same thing for most other big countries. Japan has the same problem. China has, in some ways, a much worse financial problem. And Europe is just committing cultural suicide and financial suicide. It's virtually over right now as a consequential part of the world. So as that progresses, that means inflation picks up, the world's currencies fall at an accelerating rate. And the only way to fix that is with some kind of a currency reset, where we just we give up on the current system, like we've done many times in the past. There have been lots of currency resets. The Bretton Woods Agreement in the 1950s was a currency reset. So it's not something that's unheard of or unfamiliar to economists or anything. It's just that we screw things up on a global scale in a way that's never happened before. So it's possible that we can just go back to a gold standard. And that gives us a system that is stable and that allows us to grow organically without, soaring debt and raging inflation going forward. But two things about that. The only way that'll happen is if it ends up being the least bad option for governments on a list of horrendous options. Because to go back to something like a gold standard or some other commodity-based standard, whatever, there will be arguments about what form it should take. But to go back to that means governments have to give up the power to create money out of thin air. And these people are sociopaths to begin with and narcissists. But even a normal person wouldn't give up that power without a fight, right? And these guys who are in charge of the world right now are going to be very unwilling to do that. So it has to be something that's even worse, staring them in the face. The second thing about a currency reset is that it hurts the people who trust the government. In other words, the ones who don't really deserve to be hurt, just the regular people who have dollar bank accounts that they're using to save for retirement or bond funds in their retirement accounts, things like that. Those things become vastly less valuable when the currency is devalued in order to go to a new monetary system. Because, if we used a gold standard, gold price would have to be $15,000 an ounce or so, something like that, which is to say the dollar relative to gold becomes way less valuable. And so everybody who holds dollars is hurt by that. So, you got two groups of people, the sociopaths who don't want to give up that power but will be forced to, and the regular people who will be impoverished by it. So it's not a pain-free process. It's just the least painful process. So we have to get through the civil unrest that comes from us devaluing the life savings of 70% of the country or whatever. So not fun, very painful for people who don't deserve that pain, but possible and workable. It's the kind of thing that might save us. The only people it'll be fun for is the gold bugs, because their main asset will be revalued by 3 times. Maybe it'll triple or maybe quintuple, depending on, how it all shakes out. So if you've got a bunch of gold and silver, you're positioned financially to actually benefit from what's coming. Well, at the same time, it's becoming dangerous. We're liquefying it. Most European central banks just lately are cutting interest rates, and the Swiss National Bank just went to 0. So we're back to reserve now and headed to NERP in the not too distant future. So monetary policy is super easy. Fiscal policy is crazy easy right now. Most of the big countries are running massive deficits, and that is stimulative. You borrow a bunch of money if you're a government and you spend it, that puts that money in the hands of the people that you spend it on. So we're massively liquefying the economy in anticipation of some kind of a currency crisis. And here you got Trump publicly calling the chairman of the Fed names because he won't start cutting interest rates. So that either resolves as the chairman of the Fed acquiescing or Trump replacing him with somebody. So the governments of the world are aggressively easing, and that's good for stocks. When governments are printing a lot of money and just sending it out there, that money goes, first of all, to the big banks who give it to their rich clients. And the rich clients already have all the food they can eat, and they already own multiple houses. So what do? They toss some of it into the stock market. So stocks go up. Now, at the same time, gold and silver are going up. So you're right. Everything's going up. Liquidity is flowing into all these different things in different ways. And the gold is slightly different because it's being bought steadily by central banks who foresee the end of this process. They see either a political crisis, which makes the BRICS create their own currency, or a financial crisis where a lot of big currencies just start to crater, and they're accumulating gold in anticipation of that. And they're not really price sensitive buyers. I assume, most central banks have a target in terms of tons of gold. And so they're just out there buying it to reach that target. And that's why gold's run this time around has been so steady. It didn't meet a lot of resistance at $3,000 an ounce, which you would normally expect, big round number or something like that. Never having been there before, you would think there would be all kinds of sell orders at 3,000, but there weren't. Gold just marched right past that number and went up to eventually about 3,500. And now it's consolidating. But if the central banks continue to buy, which I think they probably will, because there's nowhere near a resolution yet in all of our problems, that gives gold a tailwind. And then meanwhile, you got silver, which is connected to gold via the gold-silver ratio. It got up to 100. In other words, 100 ounces of silver to buy an ounce of gold just lately. And that's a screaming silver buy whenever that happens. And subsequently, silver outperformed gold. So there's still that kind of connection. But then silver has a wild story in industrial demand because solar power is rocketing right now. The other forms of alternative energy, frankly, just didn't work out. I wrote a book on an investing in clean technologies back in 2014, where I said good things about wind power and geothermal and stuff like that. They never panned out. Wind is a catastrophe. It's just a giant engineering project with no actual way to replace carbon-based energy sources at all. And the other stuff just never really panned out at scale. Solar, though, is rocking, and solar panels use silver. So silver's got this dramatically increasing industrial demand while it's in deficit. In other words, the world's mines aren't producing enough to satisfy today's demand, and demand is going up dramatically from here, in part because of silver. And then, there's silver in electric cars, and electric cars, especially in China, are seeing massive demand. And then you got the military thing going on here now. What happened with Israel and Iran was fascinating from a military standpoint, because we found out that even sophisticated missile defense systems can be overwhelmed by enough missiles. You just send enough of them there, and it makes it impossible for the interceptors to catch everything. So Iran just rained missiles down on Tel Aviv and other parts of Israel. And watching that, all the rest of the heads of state on Earth called their military procurement guys and said, okay, we need more missiles, right? Because missiles work against even sophisticated systems. So everybody's going to load up on missiles and drones. There is no interceptor that's going to stop something like that. So anyhow, that's the future of warfare. The assumption is out there that there's a fair bit of silver in missiles. And in the aggregate, it comes to a pretty big number. And it's going to grow dramatically going forward. So the silver industrial demand story is pretty spectacular. So it's a monetary metal, and it's something that even if it wasn't a monetary metal, would be a serious buy at this point. So, these are the investment theses that flow from global war and monetary collapse and things like that. There's a lot of crises, and crises always create opportunities. So as an investment nerd, that's more my focus, because I can't do anything about World War III.